All right, once again, I'd like to welcome everyone to this week's edition of our training and refresher program of the Prosin Network of Professional Accountants. And by the way, this is our 11th session in a row, and we have had a lot of benefits as individuals and by extension the SMEs that we service in the Nigerian business space. So for the purpose of emphasis, I like to reiterate the objective, which I always do every session. I like to reiterate the objective of the network. Number one is for networking, which we have a WhatsApp platform we're using for now for the purpose of networking, and we have had good experience networking. We are over 200 professional accountants in the network, and we are getting along very well. And the second objective is to have a training like this where we tax ourselves on the need to upskill and remind ourselves of what we on our own may not know, because we have different specialties. So we tax ourselves by getting resource persons from within us to educate us, and sometimes we reach out to our non-members to just come and give us heads up on goings on in the business world. So those are the three objectives. So the third objective is for big engagement where we can upon structures and consolidations, we can take on jobs from big corporations like Access Bank, Dangote, and so many organizations that are top, where one member cannot, or two or three cannot take. So we can form a team and respond as a network to such call. So those are the three objectives of this network, and all the objectives are being pursued diligently, and we are seeing results. So today we have been, for the past 2 weeks, we have been talking about finance, and you can agree with me that the finance cannot be overemphasized in a business. And that's the reason we thought it appropriate to take on the topic. So firstly, we invited some officials from United Capital Asset Management Limited, and they told us about the various investment opportunities available to us as individuals, and also to the SMEs, most of us who are independent practice service. So what you're going to be picking, or what I've been picking from our trainings and refreshers, are not just what will be useful to you personally. There are also things that you can add, you can incorporate as add-on services to your clients, which are SMEs for now, because we are focusing on SMEs for now in preparation for taking on the engagement that will be coming from large corporations. All right, so today we're going to be talking, as you saw in the title when you joined the meeting, is about pension schemes, and the financial planning, the relation between pension scheme and financial planning to us personally, and to our clients, the SMEs that we service. So our resource person is going to be coming in by, going to be invited up to speak up by 25 minutes past 5, which is in about if I'm right, 15 minutes time. Yeah, 15 minutes time. So we'll be talking about pension. But before he does that, we had a session last week where we talked about account payable and account receivable, and the resource person, is Mr. Ni Omoni Bodede, an audit manager from PwC Birmingham in UK. He was with us last week, and he did just a appropriate justice to account payable and account receivable management. So I'll just like one person to just do a refresher for us, so we can quickly get ourselves abreast of what we did. Although we had the session recorded and uploaded on our YouTube platform, but I just want someone to just give us a refresher, a quick refresher, just a volunteer. All right, as usual, we have Mr. Samuel Suyori. Please, within 2 minutes, just take us through what we had last week. Thank you.
All right, sir. Good evening, everyone. So we discussed about accounts payables and accounts receivables last week, and majorly the scope of the resource person was within the confine of SME. So we had the resource person did justice to accounts receivables and account payables. So when we talk about accounts payables, it has to do with the money owed by the business to its supplier or his supplier basically. So for the account receivable on the other hand is the money that is owed by the customer to the business. That is the debt liability of their customers to the business. So and we discussed about several concepts on it. Like he asked questions regarding how SME try to manage both sides, that is the accounts receivables and accounts payables. So we are made to understand that one of the things that causes most financial stress to SMEs is the accounts receivables and account payables because SMEs do not have a proper record, they don't have a proper financial like planning regarding the both sides. So also he made us understand that the accounts and receivables is tied to the liquidity of the business. So if a business will perform well, definitely his account receivables his accounts, that is the AR, will be well okay. That is their customer are doing well. That is they are um, doing their obligation as at when due. So, and if this is okay, definitely it will affect their AP, which is the account receivables. So they'll be able to do well on the other side of the account receivable because as more as their liquidity position gets stronger, definitely their vendor relationship to tend to get stronger. And lastly, I'll just he made a little scenario for us that let's imagine we have um, a 75 days um, like a 75 days and days that our supplier need us to pay a certain number of money, and we have a 30 days policy whereby we give our customer to pay like their debt. So basically what I'm just saying is that like there's a gap between the account receivables and account payables. So in order to bridge that gap, we made us understand that we must establish a um, a good credit policy. Yes, that is, we must have a policy. Maybe at a certain number of time, we must have our the customer should have paid their their funds, and also for the account payables. He also made us establish. He established that um, we should when our as I said earlier, when our liquidity is stronger, definitely our account payables will also be doing well. So basically, so in order to cover the gap between um, the account payables and account receivables, we must work on our account receivables, such as establishing credit policy and granting incentives to our customer, and also investing in some other things that can improve their liquidity position. So that's just what we discussed last week. Thank you.
Yeah, thank you so much, Mr. Samuel, for always giving us recap. And by the way, it's not the right, the sole right, or Mr. Samuel is not the monopolist of recap. So other members, please, going forward, always just show commitment to the recap as well. But that does not mean that we are trying to discourage Mr. Samuel. Mr. Samuel, thank you so much. I appreciate what you are doing. Thank you so much. All right, so our resource person is going to be coming. in less than 10 minutes. And as usual, I need to just let you in on something. Over the weekend, no, not over, during the week, I posted, I did a post on the group. Okay, I posted it on my status, and I mentioned the group. And the video was about the popular businessman we know in Nigeria, Mr. Femi Otedola, while at Dangote Refinery, made a statement that he he had understanding with Mr. Or had understanding with Alhaji Dangote that he was going to pay him $100 million to get some shares, or rather stock, of Dangote Refinery as a compensation for giving him moral support. Because if you've been following the news, I've been following. I always see him many times over. We always accompany Alhaji Dangote to on an inspection tour to the refinery. And so I thought, okay, that it would be appropriate for him to get compensation. I thought it was on a personal basis. I didn't know it was factoring business into it, even though they had personal relationship. But that's not what I wanted to bring out from it. This is something that at the latter part of the video, this is something that struck me and got me thinking. He currently is the singular, Mr. Femi Otedola is the singular majority shareholder of First Bank PLC. So he actually controls largely, he's a majority shareholder of First Bank. And I think by extension, First Bank Holding. I think it's First Bank Holding. So I thought that because I follow him closely, so I thought he sold the shares he had with Get a Good Power to consolidate his stake at First Bank. I didn't know that he actually was being strategic about investing in Dangote Refinery. It was in that video I got to know. So it got me thinking, and that's why I mentioned the group. So because I thought we need to see that. So it just shows us an example of what investment or having an investment kind of attitude can do for us. He's an investor, and as it is now, he has control over many things. Apart from the control over financial resources, he also has control. The real control is control over his time. He decides because he doesn't do 9 to 5. He doesn't go out and come in. Although of course he does it at a strategic level. His investments are his staff. His money, or what he has been able to accumulate and compounded over the years, are his staff. Going out to make money for him, and that's what he's using to finance his lifestyle, and other things that come with it. And also, just during the week, NNPC said they wanted to increase their stake, because NNPC Limited is one of the shareholders of Dangote Refinery. So they said they requested to increase their stake in Dangote Refinery, but it was turned down. It was in the news last week. So it got me thinking that why will NNPC Limited, that has 3 refineries, one in Kaduna, another in Port Harcourt, and another in Warri, decide to just leave all those refineries and pushing to increase their stake in Dangote Refinery? That's an obvious question that I believe every one of us can answer here. So it means that the refineries are dead, and they are just there. I don't know what they are doing. Gopping money. I've been gopping up over the years. So it means that Dangote Refinery is a very good or a prospective firm that investors are looking towards putting their money and having a long-term perspective or attitude to that investment. That's why I said that there may not be secondary market for the Dangote Refinery shares immediately, because of the demand for the stock. All right, so just aside, I have 5 more minutes. So I said something at the beginning of my speech that we've been talking about financial management, and personally, how we can go about our personal financial management, and by extension to the SMEs we service, because you cannot give what you don't have. It's what you have you can give. So it has to work for you before you put it on the table for others to benefit. So, just like with Mr. Femi Otedola, we need to also have investment culture or investment attitude. I think culture is the best because culture is the way of life. So if you make something in your culture, you are inseparable from that thing. So you have to learn how to invest because we are all most of us here we also do 9 to 5, and the way 9 to 5 is, you wake up early in the morning, by 8 a.m. you're already at your desk. 5 p.m. You're gone. So you're spending like 8 hours on the job. Then maybe probably 4 hours for those of us who are in Lagos. 4 hours commuting, 2 hours going, 2 hours returning. Then add that to the 8 hours. That's 12 hours. So that's half a day. That's half of 24 hours. You're already on your job. So multiply that by in 10 years time, you'd have spent five years doing this job, and it's not bad. What you need to just do is, while you are doing it, ensure you are putting something together to invest. We had resource person come from United Capital Asset Management Limited, and they came and told us everything we need to, where very certain opportunities we need to put our money on. And this is not MMM, it's not Park or all those things that is done informally. This is SEC, Security and Exchange Commission regulated investment, and United Capital is a well-known investment. And you don't even have to go there. There are several others. We have Meristem, we have Stanbic. There are others, so you can do your research. And the goal is just ensure you are putting things together and have this goal in mind of your money, doing the work for you. So you have your money working for you. And the way it can be done is by compounding. You put it today, you put maybe 50,000 this month, then you use interest, you roll it over, you keep on doing it until by the time you are maybe 60 or 50, you should have something. By that time, what should be coming to your account as inflow to fund your lifestyle and your expenses, maybe like 800,000 or 500,000 per month. There are people like that they have so much investment that every month they get as much as 500, 600, 700, even more than 1 million as if without stepping out of their house. Although it may not be so for may not be able to gather that much, but the most important thing there is having that culture to save, to invest. Because if you are not faithful in the 250,000 naira you earn now to build an investment portfolio for the future, because it will always not be like, for instance, it rain today, and when it's raining, I believe everybody stayed indoor. There will always be a raining day in life where you cannot go out and come in. You can only just stay in a place. Or for instance, when you are 70-year-old, what business do you have driving to VI back and forth? At that time, you shouldn't be doing that. Your money should be doing that work for you. You don't even have to wait for that 70. Just within, by the time you are 50, 55, you have built up financial portfolio whereby your money, the portfolio is now giving you money that you are now using to meet your expenses, take care of your children, do everything you need to do, and you're just living well. So all these things are not magic. They are things that you have to be inculcated as a culture. And that's why we have to bring our resource person here, because pension, many of us don't know that pension is also one of the ways. Contributory pension is also one of the ways by which you can also secure your future. Some of us, in Nigeria, there's this culture of non-compliance. If you are working with an employer that is compliant with Contributory Pension Act of 2004, you are blessed. I know many of those employers, they are just doing it in order to get certificate from PENCOM and to bid for contract and all of that. However it is, if you are in such a company and you are getting pension, you are blessed, because by having your retirement savings account having contribution every month, it means that it's just like your financial future is the government is forcing you to plan your financial future, because that money you are putting in your employer, they are putting in your retirement savings account, is actually savings for investment, because the PFAs will invest the money into various approved investment by PENCOM, and every month he use interest for you. And by the way, I know our resource person is on ground to give us plenty of the details. By the way, if you have a retirement savings account here and you are less than 50, let me give you this for free. Just go to your relationship manager and tell the person you want to migrate to fund one. Is it fund one or fund two? I think it's fund one. I think okay, it's fund one. So that one get you higher interest. I know many of us don't know this, and I know a few people know it. So it gets you higher interest. So you can do that. So our resource person is going to come in and tell us how our pension can also help us secure our future while we're also doing our investment by the side. The pension too, you're also paying attention to it, and at the end of you put the two together, you have a very good financial future. As an old man or aging man, you are not lacking money because you're already prepared when you were young for the future. All right, so on that note, I would like to invite our resource person, which we all know is Mr. Afeez. Is the divisional manager at Lagos Island 2 of Leadway Pension PFA. So he's going to come in now to do justice to the topic for today. Mr. Afeez, please, you have the floor.
Good evening, everybody. My name is Afeez Balogun, and with me are my colleagues Balogun and Blessing on the call. And thank you for having me. The topic is one I'm very passionate about, particularly where you mentioned personal financial planning, and that's totally changed the game because the initial slide I had for you attended to general matters. So I had to tune this to attend to the topic. So I'll be doing this. I'll be sending 2 slides to you, one for the topic of the day and one for knowledge beyond what we are discussing so that it gives you an opportunity to know more about pensions. Give me a few minutes so that a second to share my slide so that we have an opportunity to get along with me better. A minute. Please confirm you can see my slide.
Yes, it's clear.
Okay, good. Let me put it on better. All right. So our topic is pension scheme and personal and financial planning in Nigeria for Proceed Network workforce. I really like the objective that you follow and how you continue to, build knowledge amongst yourself. Before we go into the topic, I would like to know, let's start where did pension start from in Nigeria? The development we have currently, it didn't just start overnight. We will see that for every update, every review in the pension scheme, it came with value additions to the life of the contributors. Initially, when pension started, particularly in 1951, under the pension ordinance, it was just the British officers that had pension before it was expanded and accommodated the public servants. After that, we had unfunded system where a defined benefit scheme was put in place. And it's such a scheme that pension is determined by your last pay and the number of years you have put into service. The defect that came with this was the fact that it was unfunded and the pension scheme failed. There was a major embarrassment to the nation, particularly the railway workers who were on queue waiting for money that was not there. So at that old age, we started seeing people falling and dying while waiting for money that was not even there for them. After that, we had the MPF for the senior members here who have been around for a while. They will know the National Provident Fund, which also had the private sector entrance in it. We had that experience, and the civil service consolidation, where they also came into pension to ensure that everybody had, their old age covered. The systemic collapse in all of this pension was the fact that it was unfunded, it was not well regulated, and poor budgeting was responsible for the failure that was recorded. Then the shift to contributory pension scheme under President Olusegun Obasanjo in 2004 was the game changer, where a lot of introduction was put in place, transparency. You could see where your fund is being contributed on a monthly basis. You could project how much you will retire based on the returns that is being gotten on a monthly basis. You could also have an additional voluntary contribution. So some of the updates we've had from that time to now, you will realize that one is voluntary contribution, permission for you to put about 33% of your income into voluntary contribution, which also helps to reduce your tax exposure. Now we have what we call a multi-fund structure. In 2007, 2008, when we had the economic meltdown, before then, every fund in the pension was basically the active fund, which was Fund 2, and the retiree fund. But what happened then also affected the pension scheme because largely they participate in the general economy and the investment structure in the country. So a lot of retirees lost money, particularly in Europe. In Greece, it was worse. People committed suicide because the fund they had envisaged to, fund their lifestyle with depleted greatly. This brought the idea of multi-fund structure to the country where investment is placed based on risk appetite. We will get to that. I just thought I'd brush up on everything that, and you mentioned something greatly about the investment you had with the other asset management firm that you had before now. One thing, and the uniqueness of the pension scheme is such that it's not an investment that you can easily dip your hand into. And the moment you are able to pay yourself first under the PPP or under the voluntary contribution, now called PPP, personal pension plan, you realize that you would even retire faster than you envisaged. And we now have the equity mortgage. I'm opportune and privileged to manage the ultra high network clients for PAL Pension, now under Leadway Pension, because PAL Pension was acquired by Leadway, and I still manage the crop of clients, the ultra high network with threshold balances from 100 million and above. So this has exposed me to the culture and the behavior of the elites, which I would share with us. They care about their life now and when they are not around anymore, which speaks to legacy and trust fund management. So then we have the non-interest fund. We also have diaspora contribution right now. All of this helps to. Last year, it was mentioned that the Nigeria stock market was the best in the world. And imagine if you are a part of the scheme that delivered high returns on investment on the pension scheme, and the need for you to also invest in the economy. You will know what that would mean to an early retirement on our part. So let's go into the business so that I do not take much of our time. Our content: pension scheme in Nigeria, personal financial planning, coverage of pension scheme in Nigeria, why pension planning matters, core elements of personal financial planning, personal fund and as investment vehicles, financial planning across life stages, challenges facing pension and financial planning in Nigeria, economic importance of pension, and our conclusion. Let's do this on a personal ground. Know your money personality. Just Google this. It will take you through what you need to put in place to ensure that you have your financial planning in focus. Ideally, in summary, pension is an arrangement where contributions are made during working years and accessed after retirement. So today, I would say, from my experience, is the future we are planning. Whatever we do today will determine how well we position ourselves for the future we want to have. If you fold your hands and just have that belief that tomorrow will structure itself, you will be deceiving yourself greatly, because if you want to be a doctor and you fail to go to medical school, I don't know the kind of doctor you will become. But I always tell people that for every one of us who writes one professional exam or the other, the day you go and write your final exam and you pass, you have passed before that day because you have prepared. It's just the certification that showed all the hard work you have put in the past. So it's not that day that you actually qualified, but it was that day that certification showed all that you have put into it. So if we do not plan for the future, we might not have the future we envisaged. So this is it. Financial planning, our personal financial planning. It starts from daily living expenses, education, home ownership, business growth, wealth creation, retirement, and legacy. But on the call, a colleague of mine, we used to have what we call monthly contribution among colleagues. But when enlightenment, education developed, nobody told us before we stopped doing it, because we realized that having played in the equity market, it didn't make much sense to delay your fund, particularly if you're the one that will receive the last one at the end of the year. You want to imagine the person who had to get his withdraw first, and how much that person must have made in the equity market. So we just thought to ourselves that on a monthly basis, a portion of our income goes into investments. So that's why I said at the beginning that is a topic that I'm passionate about, and I believe greatly that as accountants, you're also in tune with this. Let me go back to the first slide, and you'll see how we mirror the first and the second slide, daily living to the extent of legacy planning. And I mentioned to us here that my experience with high network clients, they worry about trust, they worry about their legacy even in debt, they worry about how their children will look if they will continue in that elite mode even when they have exited. So and that's why when they build wealth, they also secure it through insurance. When they secure it through insurance, they also give it to trust to also manage on their behalf. This is not the time when we speak to wills and somebody is already thinking about, oh, are you thinking I will die? I think it's small minds that think in that way. But these are people who, and the Leadway Group has put all of this in place to ensure that in terms of HMO, in terms of trust and will, in terms of asset management, pensions, insurance, all of these things are things that help us to put our life in order so that we do not receive shock from the uncertainties of life. Like I mentioned, the daily living expenses to the legacy we build. Let's look at the next slide. You see that income management to estate planning, and that's how we exit eventually, from retirement planning to estate planning and all of that, to tax planning. You realize that they also insure whatever they put together. Investment is key, savings is the beginning, you understand, and not eroding income by managing it at the beginning is the starting point, right? So let's go on. Types of pensions. Now we have the contributory pension scheme after we had the defined benefit plan initially, where your last pay and the number of years you put into service determines how much you are paid at the point of retirement. But right now, we know that that scheme failed due to poor budgeting. In fact, it got to a point where the next government does not feel responsible for the depletion that has faced the fund, and they feel that they should handle their project. So it kept compounding, and people kept retiring without having, any form of payment, which I mentioned initially was a major embarrassment to the nation. So going ahead, under the contributory pension, we have the federal government, state, and private in it. Under private, now we have what we call formal and informal sector, and that's where the PPP, personal pension plan, which used to be a micro pension, was. The contribution structure under the law, employee contributes 8% and employer contributes 10%, making a minimum of 18%. Initially, when it started in 2004, it was 7.5 deduction from employer and 7.5 from employee, from an emolument comprising of your basic salary, transport, and housing. The types of pension we have: the money is kept in a retirement savings account managed by your pension fund. In this discussion, we'll be hearing PFA, PENCOM, PFC, which is the pension fund custodian that keeps, custody of the fund. Examples of pension includes power pensions, Leadway, IBTC, ARM, Access, and the likes. So while pension planning matters, many Nigerians underestimate retirement needs because, even before going into it, a lot of us are deceived by the youthfulness and the fact that we feel that next month another salary will come in and all of that. Apart from that, you also have a lot of other factors like the extended family support system are weakening. Inflation erodes purchasing power, which, for example, if you notice the spike in house rent, food, while we are trying to restructure the economy recently, yes, the reforms are good, but whoever is paying for power right now knows that if you do not prepare well for retirement, maybe all that you get from retirement will barely pay your NEPA bill. So there's a need for that preparation and for the shock that might come at retirement. Knowledge has gone beyond those flimsy excuses where people say that, I'm retired. A lot of retirees now are retiring richer than when they were in active service. It's just for us to take advantage of the opportunities available to us. We have the healthcare cost rise with age. Economic uncertainty affects earning ability without pension planning. And that's why even at old age, some retirees are on HMO from their parents, so that anytime they can just walk in and walk out, it's a way to plan for the uncertainties, and at that age, what matters most is security and comfort. Where you get the comfort is where you can walk into the hospitals and walk out at any time. And retirement can become financially stressful too. And I also want to believe that we are not among those who have the reliance on my children are my pension, or my husband is my pension. Please don't do that anymore, because I've seen situations I've experienced where children are letting their parents know now that, see, daddy, prepare for retirement, so I won't carry that burden. So that's the gist around this. Okay, core elements of personal financial planning. Say, for example, one earns 500,000 monthly. Without discipline, they still remain financially unstable. Even this earning right now, it sounds big, but when you hit the market, you know that it doesn't match the value that you will get. So what we need to do is the needs, savings, investment, retirement, and emergency fund. One that I need to also correct myself personally is the area of emergency fund. I'll just share my own investment plan with you. After 70% of my earning goes into the equity market, Afeez is balling, So, but I think that from that 30% left, we need to start putting into plan emergency fund, so that we are not always pushed to go into the investment to ask for crediting at every point in time. So this is how that works. Okay, core elements of our personal financial planning is number one, 3 to 12 months of living expenses, and purpose, job loss, medical emergency. And the beauty of pension amongst all of the investments you have in place is that in a situation of emergency or medical emergency, one is forced to dip his hands into any money available. But if you have locked it in pensions, you will have to sort yourself one way or the other. By the time the person comes out, well or not, you know that the future has been tampered with. And that's why the beauty of the pension amongst other forms of investment is such that it really caters for that old age that we dread so much. So that's for that. Our investment planning, savings alone really beats inflation. Whoever is saving in the bank should please get some investment advice from professionals. We have treasury bills, bonds, mutual funds, equities, real estate, pension funds, dollar-denominated assets, where right now we have diaspora contribution into pension. Investment decisions should depend on age, risk tolerance, income stability, financial goal. In the multi-fund structure, it speaks to risk tolerance and how it affects age. When you mention that people should move to fund one, if you are above 50, at age 50, you really cannot move your fund to fund one because of the what's it called? The investment is tied to risk appetite. So ideally at age 50, one is supposed to have his fund in fund 3, but the Pension Act permits that you can step down to fund 2, but not to fund 1. I'm in fund 1, and my team here, we are also in fund 1. And true to what you've said, we have seen the growth effect of that fund, more so that the equity part of the investments for fund 1 and fund 2 has been given more room beyond what it used to be. We envisage more growth in the pension scheme. All right. Insurance and risk management, like I mentioned earlier, properties, assets, life must be insured, even to the extent of education for those who married late or started childbearing late, and truth be told, as we age, as we wake up on a daily basis, one day is gone from the date that the expiry tag that God has put on our body. Nobody knows where it is for us to even read it and know if you have 50 years to go. But reality is that as we wake up every day, one day is gone from the last day, so we are getting closer to our graves. But the child that we give birth to late, what are we doing? Don't be selfish. Plan for that child. Also put insurance, education plan and legacy for the child, so that when you're gone, they can also see the child through university, and they can live better life after you're gone. All right, then. So for pension fund as investment vehicle, it has impacted the economy a great deal, particularly when you see rise in the equity market. You know that smart investors have come in. By the time they bring their huge fund, the pension fund right now in the country, I think is about 27 or 28 trillion put together, if I'm not mistaken. Imagine that fund in the economy, in the equity market, or that they use a large chunk to buy some stocks. Just recently, PENCOM, which does not permit fresh listings for PFAs to go into, they have permitted the listing by PFAs to go into Dangote refineries. That also shows that something big is going to hit the market. And I see a lot of growth in the pension space, and more reasons for those of us who have pension accounts to play bigger Before I forget, I want to mention this. Please know very well that despite compliance, no organization would deplete its finances to satisfy you. That's why we see that a lot of organizations, even particularly in the banks, I see senior managers having less than 20 million in their 50s. And by the time you look at their salary, yes, the salaries are huge, but they have intentionally, accountants, you know how you maneuver these things, they have intentionally made the portion where pension is deducted slim, where you have housing, transport, you know, they have made it slim, basic salary, transport, and housing. So when they make that deduction, it comes down to nothing. It's you are responsible for your future. Make sure that you complement that with your personal voluntary contribution to ensure that you plan very well for your future. I just thought I mentioned that to us. So these are places where investment vehicles are placed within the pension space. And we must also know that we are not permitted to invest in organizations that do not have AA ratings. You know, so that's to ensure that the funds, you know, are protected. Financial planning across life stages. Okay, you see, when we get to what pension puts in place, this is from the research I did, right? You see that from age 20 to 30, you have budget discipline, emergency savings, early pension enrollment, aggressive long-term investing, advantage, time, and compounding. Let's go to the next one, and eventually we'll compare what the multi-fund structure puts in place for us. Mid-career level, you have education funding, mortgage management, retirement acceleration, insurance adequacy. This stage often determines retirement quality. At this stage, a lot of people already have houses, and those who request for mortgage the most from their pension are from this age bracket. And you realize that they are rushing to ensure that they complete their house and ensure that if they retire at any point, they at least have roof over their head and all of that. For the 55 and above, it's capital preservation. There's no room for risk anymore. Retirement income planning, healthcare funding, estate planning. They're always doing their trust and will, ensuring that legacies are protected and all of that. Any mistake at this point can be costly because recovery time is limited. Now, this is what the pension scheme has in place. From the lessons learned from the 2007-2008 economic meltdown, you realize that the Fund 1 is the fund you mentioned earlier, aggressive. If you are below age 50, you can have your fund in Fund 1 by filling a form and signing, giving instruction that, yes, you want to be in Fund 1. The variable income instruments, maximum of 75% of the portfolio. Fixed income instruments, maximum of 60% of the portfolio. If you go to Fund 2, the Fund 2 is the default fund, where if you are 50, 49 and below, by default, that is where everybody is registered in as much you are not 50 years. The variable income instrument, maximum of 55% of portfolio, and hold on, as maximum of 70% of portfolio in fixed income. Then Fund 3, which is from 50 years and above, at this point you are looking at retirement ahead. Risk taking is minimal. The variable income instrument at this point is 20%. And that's why when you look at the growth on a monthly basis, when Pencom permitted us to showcase, you know, the performance, you will see that year in, year out, Fund 3 is usually outperformed by Fund 2 and Fund 1. And the fixed income instrument here is very high, you know, because it's capital preservation, and that's 80% of the portfolio. Now we have Fund 4, which is retiree fund. Obviously, this will not give room for much variable income, and it is 10% of the portfolio, while 80% of portfolio for fixed maximum for Fund 4. Fund 5 is the PPP, personal pension. Now, micro pension, which tended to informal sector, and the voluntary contribution are now merged together as the personal pension plan, where you have 10% of the portfolio in variable income and 60% of the portfolio in fixed income. And the beauty of your personal pension plan or core voluntary contribution is that you can access it while in service. The new pension act says that any fund that has stayed 3 months can be 50% of it can be accessed. Then we will have the fund 6, which is loan interest fund. This was requested by our Muslim brothers, and which comes with regulation from no investment in alcohol, gambling, and some other things that is against their belief. A lot of Christians too have bought into this, and a lot of Jews have bought into this fund. And funny enough, is one high-yielding fund. If you look at or trace the performance under the fund, you have the variable income instrument, maximum 55%, and you also have the fixed income instrument, maximum 70% of the portfolio. Challenges facing pension and financial planning in Nigeria. Common issues include low financial literacy, inflation, weak saving culture, informal employment dominance, inconsistent income, limited retirement awareness, overdependence, and family support. This is why financial education is critical. So that is one thing that a lot of us have had to go outside to learn from the experts, and I think greatly that it is now that one can actually say, yes, we are looking forward to something meaningful, because any investment in the equity market, like they say that there's no good or bad time in investing in the equity market, in as much as you are not one of those flippers and who just trade within weeks and months. The moment you leave it for 2-3 years, you see that the market will reward your patience and you see better returns on it. And we under the strategies for better retirement outcome, we have start pension contribution early. That is very, very important. So if you have a pension account and your employer is not remitting, is not doing you any service, do your best to ensure that you continue to hammer it, because eventually when they contribute, they will contribute at the face value. Meanwhile, you've lost investment income or returns on the fund. Increase voluntary contribution regularly. Avoid lifestyle inflation. Not every review in salary or promotion that must reflect a new perfume, a new car, and all of that. So, or you want to change house just to reflect the new status. So build multiple income streams. We've mentioned this enough. Review investment allocation periodically. Maintain emergency reserves. Protect assets with insurance. That is very, very important, so that it minimizes your loss. Avoid excessive debt before retirement. Learn basic investment principles. Work with qualified financial advisors when necessary. Myself and my colleague on the call follow somebody called Coach Omiete. He gives his coaching and advice every Monday, Wednesday, Friday. I also want us to follow him on, I think that on YouTube. Yeah, he's also on Instagram and some other, social media channels. It would give you insights. You can also call in to ask that you have X amount. Where does it feel that you should place this fund, and it would analyze and also give you feedback. But it will let you know that this is not a financial advice. Also do your research. You just being safe, right? But we've never had cause to regret his insight into matters. The bigger economic importance of pension system is the fact that it has also helped to drive the economy. A strong pension system benefit not only individual but the economy. Pension assets help function in fund infrastructure, deepen capital markets, That is one big impact the pension fund has on the market. You imagine where you've bought a fund, and shortly after, the big cash owners, the smart investors, the institutional investors come after that. As the fund grows, yours will also grow with it. Stabilize long-term investment, encourage national savings. Countries with strong pension system often have better financial stability, stronger domestic investment capacity, reduced elderly poverty. And that's why you also see that in countries where they have elderly people who also engage in work and all of that, they tend to live longer because of the fact that they leave home, go to work and return. That is one form of exercise that also elongates their life. Let me share this with you, even though it's out of the topic, but I thought that I should bring it to our knowledge. I used to work at Crusader Pensions, and my MD then had a culture of looking at every death benefit, claim that came to his table, and he would look at the cost of death. More than 90% of the cost of death was due to cardiac arrest, health, heart-related diseases, and all of those things. In trying to secure our wealth and all of that, I think it's also important we take care of ourselves by exercising, eating right. If you have worked so hard, for the funds you've put together, I think you also owe yourself the duty to, exercise and be alive to spend the money. Somebody has a saying that let the hand that worked for the money enjoy the money. So in Nigeria, pension, this is our conclusion. Pension planning should not be treated as a retirement formality. No, it's gone beyond that. A lot of people have had to call into, I know that building housing is not a small project. They've had to fall back into their pension to request for 25% to have a building in place. And some of them, because they plan properly, the 25% from their fund is even more than what they need, for the housing, So, but if they didn't have proper planning from inception, they wouldn't have these benefits in place, So, plan early, invest consistently, manage risk properly, and maintain financial discipline over time. A pension scheme works best when it is integrated into a broader financial strategy covering income, investments, protection, and long-term goals. All right. So I've mentioned this enough. This is the PPP plan under AVC. I think we should go into benefit withdrawal and the grounds under which you have reasons to withdraw from your pension. On a health ground, one can access pension. Existing scheme as a result of mental or physical incapability or total or permanent disability of mind or body before the statutory retirement age, one can access his pension under the health ground. Then the loss of job. Loss of job can come before age 50. Where it comes after age 50 is treated as retirement proper, where a lump sum is paid and the monthly pension is activated immediately. But when it comes under age 50, it's treated as loss of job, and the monthly, the lump sum is paid, 25% of your lump sum is paid to you. In some situations, you have company policy which permits retirement before age 50. Evidence of that would also key you into retirement plan. Then early retirement where employees voluntarily retire or disengage from active employment. Then the mandatory retirement where it starts from age 50. It's a general knowledge that in the public sector is 60 years or 35 years in service. In the academic sector, you have 60 years for the lecturers and for professors, and 65 years for the admin staff. En-bloc payment is paid where a calculation of a pension is done and they realize that it does not meet what's the term called now? the minimum wage, where it doesn't meet the minimum wage. I think the minimum wage in Nigeria now is 70,000. So say for example, it's calculated and you have cannot provide a monthly pension of more than 23,000 en bloc payments, the total amount in that fund is paid to you. So you don't have any business with monthly pension. 25% relief mortgage equity that I've mentioned. Then at retirement, you are faced with two choices. I think this should be a discussion for another topic because it's a bit broad between program withdrawal and annuity purchase. When you continue with your PFA, it means that you are going with the program withdrawal where your lump sum is paid to you and you continue to receive your pension till death. And annuity is naturally marketed by saying it's pension for life, but the difference between annuity and program withdrawal is that after death, in program withdrawal, whatever is left is bequeathed to your beneficiary. But after 10 years of annuity, even though that they will continue to pay you till death, but if you clock 10 years with annuity, nothing goes to the beneficiary anymore. Under program withdrawal, you continue to have what we call pension enhancement after every 2 years from PENCOM because of the investment effect on the fund. But whatever you are paid in annuity, if you are paid 100,000 this year, at the point of retirement, that's what you take until the next 30, 40 years till you die. But with program withdrawal, as the investment continue to yield your monthly pension on 2-3 years basis by PENCOM is reviewed upward. So that's the gist between program withdrawal and annuity. We can have another discussion where we see the features in another discussion. RSA benefit of optimization. I think we've dwelt on this, right? So we just speak to the last at the bottom, PFA and wills. Pension reform are govern access to pension fund of deceased employee. Once there is a will admitted in probate, beneficiaries and or dependents will have access to fund. Where they don't have it, they need to put what is called letter of administration in place. Basically, that's the gist around that. At your quiet time, kindly ask yourself this question: have you made proper plans for the protection and transfer of your assets? If you have not, I think you should consider putting a will in place. What will happen to my loved ones when I'm not there? Are they protected? Is a question that somebody who is not selfish and who cares, and truly, if that care is for the loved ones, I think we should put something in place for them. Reach a decision on estate planning, wealth preservation and transfer. Engage with us today. We have a business unit under the group where we have wills and trust management in place. These are businesses under the group. We have the assurance in place, pension, health, HMO, asset management, capital, and trust. Our self-service, we have what we call Lisa on your WhatsApp. It's the most user-friendly application I've come across, where you chat, you get your statement, letter to the embassy, get your PIN, a lot you can do. You can even change your fund from fund 1 to fund 2 from there, and so much more. Yeah, I've mentioned this. Thank you for your time. I appreciate it.
Thank you so much, Mr. Afeez Balogun. Thank you for this. This is really big. Thank you for letting us in on. You actually gave us a full package of what pension is, and I learned new things, in this session, and I believe many of us on this call pick one or two things. I'm very sure of that, and I know those who are going to be watching this video will also get some value from it, because it's being recorded and we're going to upload it on our YouTube platform so that our members, we are over 200, and of course, because of our schedules, we are busy. Everybody can't get everybody to gather here at once. So others will participate in retrospect. So now, if on the call you have a question to ask Mr. Afeez Balogun, please unmute your mic and ask the question.
Yeah, good evening, Mr. King Balogun. I really
Afeez.
yes,
Mr.
okay.
Afeez.
Afeez
Yes.
Balogun. Yes,
Yeah.
you have done justice to this presentation. I really appreciate it, and I believe the persons also appreciate this presentation. But I just want you to we would like you to share your slide. The secondly, I want you to in details the mortgage aspect of the pension stuff. So what are the necessary things that someone has to do to assess it so that we can be up to date about it?
All right. Thank you. I mentioned at the beginning that I'm going to share 2 slides with you. One will attend to everything concerning how to access your benefits, either loss of job, mortgage, retirement, name it. So that would attend to the general, while I also send this to you as a guide for this presentation.
Mr. Afeez, then you also mentioned that about mortgage. You also mentioned about mortgage.
I did, yes. Yes, so
Okay.
I said that for the mortgage, every form of benefits withdrawal, it's in the second slide I'm going to send to you.
Okay.
So you're able to see as a guide what the steps you need to take and how to process it.
Okay. Okay. All right.
Yes.
We'd like to have a Precious Ikechi. Please, you can unmute and ask your question. Okay. Okay.
Good evening. Good evening, Mr. Balogun.
Good evening,
Thank you
Precious.
so much for the insight that you have shared to us as regards pension and our financial life and all that. So I want to
Thank you.
ask, what's the difference between Fund 1 and Fund 2, and what is like the range of interest that we get on those the two aspects of saving? Then secondly, my former place of work, they are owing me some pension. When I first started, they were not paying me pension. I don't know if it was an oversight of something, and they said they were going to correct it. But up till I left, for those particular months, they didn't pay me that pension, and I've tried to reach out to them, but I'm yet to get any positive feedback. So I don't know what steps I can take so I can get them to pay the pension. Um, yeah, basically.
Okay.
Thank you.
I have colleagues on the call, so I also engage them. I will want Bola to speak to this. Hello, Bola.
Okay, process for me. Hello. Sir.
We can hear you.
Okay, good evening, everybody. Thank you, sir, for this opportunity to be here. I want to appreciate everybody for being around to this time of this webinar or seminar, the case may be. So, as regards the question you have asked, you have you worked in an organization for some years and you left, and they deducted from your salary pension remittances and did not remit it on your behalf. Am I correct?
Yeah, it's very
Correct.
correct.
Right. So in such situation, what we do or what would advise clients to do is to go to your PFA to report that organization to your probably your ROM And there's a letter we call partial or non-remittance of pension, which is a demand notice letter issued. Your PFA issues it on behalf of PENCOM to an employer that has failed to remit or partially remitted your pension deductions. So that letter entails all the laws in the scheme that threats against that. And what they need to do, that letter would be issued to that to that organization, which would institute a 7 to 14 days warning for them to make backlog remittance for for all those pensions that has not been remitted on your behalf. So usually when these organizations receive these letters, they tend to know that this staff knows what he or she is doing. And then you find in most scenarios that a lot of them go back to remit all outstanding remittances that has been deducted. So that's usually the first step we take. And once that is done, where there's a default, after a month, we reissue that letter, and this time we'll copy PENCOM. So once we copy PENCOM against the organization, usually PENCOM will pick it up with them because PENCOM has a unit which they call the control and default unit. That unit is responsible for checkmating employers that have not made remittances or are not pension compliant. And then another penalty that they stand to gain is if it's an organization that usually requests for PENCOM certificates, that would be a barrier for them once they are about to renew their PENCOM certificate for the following year. So those are measures that we take or that you can employ to ensure that those outstanding remittances are being, treated and paid on your behalf. So I don't know if what PFA you currently use. So that is what will determine how you go about it. If you are currently with Leadway, it's easy for us. You can just contact us after this call and we can do that for you. But if you are not with us, you can either decide to join us or you can liaise with your current PFA to embark on this journey on your behalf. So that's that for that. Thank you.
Yeah, thank you so much, Mr. Sabola, for doing just. In fact, when you said that, if the I said earlier on the call that most employers, I'm saying it by survey, most employers, don't really want to do pension because it's just an additional cost because 10%, the employer is mandated 10%, and the 10% is from the coffers of the employers, while 8% minimum. The 10% is minimum, the 8% is minimum. I believe most employees don't even know that it's minimum. It's not the it's not the cap, it's minimum. So if an employer will take 10% of the or 10% and contribute, nobody wants to do that. But if the employer is held by something, for instance, many employers who participate actively in contributory pension or who comply rather, because it's only because of the PENCOM certificate. Because for instance, in oil and gas, those are one of the certificates that are very important in having any bid to get bid in oil and gas, for instance, and of course other sectors. So if Precious asks if the employer, a previous employer saw that the one that needs PENCOM and this come up, I believe they want to comply so that the PENCOM is not waiting for them at the point of renewal of their PENCOM certificate. All right, thank you so much for that, Mr. Bola. We really appreciate it. All right, Mr. Chris Oga, your hand has been up for a while. Please go ahead and unmute and ask your question.
Before Chris goes ahead, let me quickly attend to a question that was asked by Precious. What's the difference between Fund 1 and Fund 2? The variable income instrument where Fund 1 is placed gives a maximum of 75% investment opportunity, while for Fund 2 is 55%. Because of that opportunity to play more in the equity market, we have seen that year in, year out, Fund 1 has outperformed most funds. So that's the major difference. Then again, it comes with risk appetite, and you cannot play in Fund 1 where you are 50 and above. But from 49 and below, you can be placed in Fund 1. Those are the two major differences in the fund. Thank you. Mr. Chris, please.
All right, thank you very much, Mr. Afeez. Thank you for the class. My own question, I just need further clarification on how to assess your my savings, because I lost my job early this year, and coincidentally I used Leadway as my RSA or pension fund administrator, and I started on WhatsApp using that Lisa. I was giving my account officer, but I've been trying so hard to reach out to get further details on how to go about this, because I've been moving around looking for something else to lay my hands on, but she has not responded. Even I sent a mail titled, it explained in details why I want to reach out to her, but I've not gotten any response from her. So, and it's fortunate for me to be here this evening to hear you say this, that once if you lose your job, you can actually apply to get something from your savings so far. So
Okay,
I
let me
need
do this
further
first. So
clarification
that
on that.
you can reach me outside this. I want to drop my phone number. My phone number is 080. I'll take it slowly. 080 35 38 11 43. You can call me or chat me on WhatsApp.
Okay, thank you, sir.
We spoke under this platform, and also share the name of your account officer, so that when I send the mail, I also drag he or she in, so that they can take it off from there. Sorry about that experience. I don't know if
Thank you very much, sir. Thank you.
Okay then. Okay, so that's for that. Thank you.
All right. Okay, there's one more, Mr. Afeez. There's one more hand up. If you oblige, you can.
Mr. Samuel, please, let's have you.
Okay, thank you.
All right, good evening, sir. Thank you very much for the session. So my question is that we understand that pension is actually a sum that is put for future.
Samuel, can you speak? Can you speak to your mic? The sound is not so good.
Okay. Hear me? Can you hear me, sir?
It's better.
Yeah, it's better now.
Okay, all right. So I was saying that we know that pension is actually a sum that is contributed to for future purpose. So my concern is that taking a look at inflation and every other economic reality, how do employees tend to benefit from their pension fund, since we know that purchasing power is usually falling, especially in Nigeria? For example, somebody that maybe started an employment in, let's say, about 2010, and coming to this economic looking at the economic situation, and maybe the person wants to access the fund at this point in time. So what can you really say about that? Is it not that the employee is at loss by contributing to that scheme? Or I don't want to get clarity about that. Thank you.
All right. You see, to be honest, the question you asked is one that has always hit us in the market. But two things let me mention. Right now, you realize that the returns on investment has outperformed the inflation, right? Last year, Fund 1 and 2 did 36 and 33 respectively, while inflation was about 15% thereabout, you know. But for those who have contributed over the years, where inflation has outrode their real investment income, they have been compensated, bearing in mind that they've bought units in those periods. Those periods where they bought units, they've been compensated now, and they have, in a way, covered for the loss, right? But if you want to come into the market now, and you did not go into the market that period because you felt that the reinvestment will not compensate for the returns, you will spend that money. That's number one. You will spend that money. You will not invest it. And if you want to invest it now, to buy the units that you would have accumulated over the years. So that's why we say that investment strategy is starting early. You understand? Starting early. So we will not fold our hands and say that we will not do anything. You can invest in other places, maybe land, or but invest. That's the gist of this discussion. You understand? It's not necessarily that it comes in the pension, right? But invest, keep moving. That's the gist. Thank you.
Yeah, thank you so much, Mr. Afeez. And I believe that answers your question, Mr. Samuel. All right, so I raised my hand up. Yeah, I think this is the first time I'm asking questions in the session. All right, so my question is this: I've been a pension desk or a pension person for my organization for a while. So I've seen quite a lot of things from employees, particularly because I deal with many employees. So many of them I've had to discourage them. I've had to discourage them from attempting, because some of them, they have a way. I don't know. They have a way of trying to putting pressure on getting, because in Nigeria, the truth is that the only savings most employees have is the pension. The singular largest savings most employees have is the pension. Personally, employees struggle to save on their own. So the pension, contributory pension plan is the first savings, and by extension investment, that most employees have. So, and because it's not just, Mr. Afeez rightly said earlier, it's not something that you just go and dip your hand into, and maybe you have one urgent need, you just go and dip your hand into and take it. So most employees, of course, you get alert maybe every month, every 3 months, and every month, depending on the PFA, and you see millions, you see 7 million in your account balance, and here you are as an employee, you are needing 10,000 naira just to survive the next day, and you are seeing your bank account, your notification from your PFA showing that you have RSA balance of 8 million or 5 million, and many of them like they come to me like, how can I access this money? Was there anything you can do? So my question is this: apart from the sitting balance, apart from the fact that employees can have access to 25% and program withdrawal and all of that, what other benefit does that sitting balance will provide, or can help employees access? The fact that, for instance, if you have 10 million in your RSA now, that's a big sum. What can one do as an employee? One do with that, or what facility can one access with such balance? That's my question.
Okay, so I would like to broaden your question a bit, right? And that's why I think we're all going to turn a new leaf after this, believing that we'll take lessons from it. When one loses job, right, the pension fund comes as your shock absorber. That's one. Two, because a lot of us have not played big in voluntary contribution, having 10 million and the likes of balances, would not give you so much into equity. But I can tell you that I have clients. I told you I manage ultra high network clients. Some have been able to access as much as 160 million from their balance. That means they have still 600 million. Do you understand? So a lot of ultra high net worth who have children abroad have asked for letter to the embassy and their statement of account, just to prove that we can actually fund the education of that child that we are sponsoring. Do you understand? So it's not the normal formality we associate pension to. Pension is a big deal. It's central to our well-being. It's central to our life right now. But there's one mistake that I want us to correct now. And I think I got that correction late. The moment you see your pension deduction, what is deducted from your pension is abysmal, to be honest. You understand? If that abysmal deduction adds up to a level where what you have in your pension is more than what you have in your savings, you have gotten some things wrong in your career. Or you have the money you have in your, that as small as that money is, it has accumulated to a point where your eye is now directed to it. You understand? That means you have gotten some things wrong. That means even in your own capacity, you will believe on a monthly basis that you can save more than that. But eventually you realize that over the years, there has been some financial discipline gaps where your pension fund now has more balances than your personal. Bola on the call is into voluntary contribution. I'm into voluntary contribution. We have started this late, but we are on that race that come. That pension, we will rival it. We will rival our balance, right? So that's the attitude I want us to put into this. It's not just something that will go and be depleting, because eventually, before you cover up from it, it's going to, you know how long it took for you to build that. And another mention is that you see that pension balance that you have, if you have done a minimum of 10 years in active service, I can tell you that maybe 1/10 of that balance is actually your actual contribution. Do you understand? Because the major growth is the returns on investment. You know, so it's a financial advice call that we all have here. Let's do our best to ensure that if it's money market, fixed income, equity, we should at least put something that we will not go back to go and deplete into investment, so that we try and balance our life. Thank you.
All right, thank you so much, sir. Well, this topic is a very hot topic. This session is rather a hot session. I can see another hand up. Mr. Afeez, would you oblige us to take this question?
I won't charge money. After this, we'll charge money.
Okay, all right. So lastly, we're going to be taking Mr. Ola has asked a question before. Maybe something else came up. Okay, Mr. Ola, can unmute and quickly ask your question.
Yes, thank you. I want to take Mr. Afeez Balogun on the point of that voluntary contribution. I want you to shed more light on it, because I know that voluntary contribution is different from the normal 8% that employee pays every month. So what is the benefit of that voluntary contribution, and at what step or at what point does employee has access to it? Because I know that it's different from that 8%. So I want to shed more light on it.
Bola and Blessing, whoever wants to take it, the floor is yours.
Blessing, I think Blessing should handle this. Blessing, are you on the call?
Yes, I'm on the call, but I think I missed part of the question. Good evening.
Okay.
She's asking about the benefits of voluntary contributions, and that's the new PPP. Maybe you can just highlight one or two benefits for her.
Okay. Good evening, everyone. Okay, so there's a whole lot to benefit from the voluntary contribution. Aside it of augmenting your already saved pension, you can also have access to part of this contribution on the long run. And also it accrues interest just the same way your RSA balance is accruing interest. So it's a guaranteed it's you more like it's more like you viewing your retirement and using the voluntary contribution to augment it in such a way that you're meeting up with what you have in mind as retirement. Thank you.
Okay, so in addition to that, right, you can do. I'm not sure if that this has been reviewed, but the last one is that you can do about 33% of your income into voluntary contribution. I read somewhere, but I'm not sure if that has that threshold has been lifted, but I think it's 33% still that you can do from your income into voluntary contribution, and it helps your fund. It helps your fund to grow. The good thing about it is that it reduces your tax exposure. You know, it comes with taxes, and to your accountant, I don't want to cross your field. You know better than me when it comes to this. That said, it also helps you to grow. You know, the fund while in active service. If you leave it for 5 years, every fund that you have put in voluntary contribution that is there for 5 years will not be taxed at the point you want to withdraw it. But the one that has stayed in less than 5 years, if you want to withdraw it, so you know the benefit. Number one, you have enjoyed the benefit of tax exempt. Number two, when you want to withdraw this fund, it's only the gain on the fund that will be taxed. Do you understand? It's only the gain on the fund. Say, for example, you put 3 million in it and you have had a gain of 1 million in it. It's the 1 million gain, you know, so it helps you with capital preservation. You know, so it's only the gain that will be exposed to tax. But if you leave it to stay for more than 5 years, both the gain and the capital appreciation will come with another tax exempt. So that's it.
All right, thank you so much, the Leadway team, Mr. Afeez, Mr. Bola, and Blessing. Thank you for your time. Thank you for giving us value here. I really appreciate it. And personally, I've had a mind shift, because even though I know it, because I have seen my retirement savings account do wonders, especially when I moved to Fund One some years. I think 3 years ago I moved to Fund One 3 years ago, and I've seen, because I'm an accountant, of course, I monitor everything that I get involved with. So I've seen, month by, in fact, I scaled it to month. I'm like, wow, this is good. 3 years ago, I moved to Fund One, and I can tell you that the interest on my RSA balance is incredible. It's unbelievable. Just the interest, not even the contribution. You said?
Permit me to chip in something.
Okay.
Okay, so in the industry, right, the transfer window is open, which means that if you are with a PFA whose return is not as fantastic, or service is not as fantastic, you have the opportunity to move from one PFA to the other. I mentioned earlier that I used to manage ultra high network clients for power pensions, which led the industry for more than 5 years in returns on investment. Leadway acquired Power Pension and intentionally picked the investment unit to handle investment for them. If you look at 3 years average in the industry, which is placed on every PFA site, you will see that Power Pension led the industry. This information we can share with you. Any click on the PFAs, I think we selected about 7 top PFAs. Any click on the PFAs, it will direct you to the site. So it gives integrity to our claim. That said, Power Pension led, followed by FCMB, then Leadway third. If you merge the performance of Power Pension and Leadway that came third, it brings us back to number 1 as Leadway, right? So leading the pack there. It's an open call to us to verify and to call us for an opportunity to transfer you to a fund that will add value to you. I've had to transfer somebody from NDIC with a balance of 280 million. Within 2 years, Bola is on the call. Madam Inse has over 500 million now. I won't mention the PFA that I transferred her, but we are not yet to the market orders, right? And she's on a retirement leave, and she's hoping that that thing clocks 600 million before she puts in her papers eventually. So my other experience from somebody who just came into the country to celebrate Salah, he had his colleague who worked in Access Bank, compared balances, and they joined Access at the same time. I transferred his fund with 32 million, while his friend that introduced him to us has 50 million right now. This is the extent of difference that you can find where you are not with the PFA that prioritizes returns. Some names can be beautiful, brand names can be good, but what comes to you, brand name is for the owner of the company. I can sell a company and sell the brand name differently because of that name. But what comes to you as a client or a contributor or a customer is the value. And for pensions is the returns on investment. And we pride ourselves greatly in this. Whoever wants to verify or is interested in transferring to us, the door is open. You can call my line. I have my team here. We'll come and visit you and have service like no other. Thank you.
All right, thank you, Mr. Afeez. Just in case you are on this call or you'll be listening or watching this video after now and you don't have a retirement savings account, I know there are many stuff like that. On the occasion that your employers don't even talk about it, so there's no even need. Please, there's need to open a retirement savings account. It's very important for your financial planning. Very, very important. And you can reach out to Mr. Afeez and the Leadway team to just get started. Just open, even if your employers are not participating, it doesn't matter. Just put it there, and on your own, just start something. Start with the voluntary, then you can now start talking about engaging your employers or talking with them to contributing to the account. And if they wouldn't, you can also make a decision. It's even enough reason to even leave that job for an employer who complies. Because any employer, like Mr. Afeez said, any employer who doesn't comply with Pension Act doesn't have you in mind, doesn't care about your future. And what need are you? What's the need of working with somebody who only cares about your presence? If you are there, after you are gone, there's no commitment, because pension is actually committing to your future. So go ahead and open the account. And if you are not satisfied with your current PFA, there's a room for transfer. There's room for transfer. I actually did transfer. I transferred from my previous PFA to the one I'm using now. And although I've not seen any reason to leave my PFA, or if I see any reason to leave my PFA, of course, I will leave. So if your PFA is not treating you right, you can migrate to Leadway Pension PFA. So you will get. I can assure you that I have been also personally. I've been dealing with the PFA and Leadway Pension PFA for 8 years. Blessings on the call. We've been engaging for 8 years, because I had some of our staff who also have a retirement savings account with the pension Leadway Pension PFA for more than 8 years. So I can give you that assurance that opening an account or migrating to Leadway Pension PFA, you get the best, just as Mr. Afeez has said. All right, so these puts us or those are close to the end of the program. I want to appreciate, firstly, every member that joined this call. You've always been showing up, and those who are not able to show up, that always watch or listen to this recording after now. And lastly, I'd like to appreciate the Leadway Pension PFA team for the commitment. In fact, I thought it was only Mr. Afeez, just only to be surprised that Mr. Bola and Blessing were also able to make the call. It shows how valuable and how esteemed they hold us in the network. Thank you so much for your presence, for your time, and for sharing your expertise over the years with us. We appreciate you, and we look forward to engaging you further beyond this call. All right, thank you so much, everyone, for joining the call. I'm going to end the call right now, and for further information, you can further information about the next session will be posted on the network WhatsApp group. And if you want to engage the Leadway Pension team, just also reach out to me. And I think Mr. Afeez has posted his number on the chat. So
Yes,
pick the number, and if you miss it, you can reach out to me. I can connect you to him and of course the team. Thank you so much, everyone, for your presence, and do have a great week ahead.
Thank you. Thank you for your time. We appreciate it.
Thank you, everybody, and have a good evening.